Hold on. Can you guys hear me now? Can you hear me now? Someone says there's no sound before. Is there sound now? Give me a guess if you can hear me now. I apologize for the audio mix up. My apologies. Let me know if you guys can hear me. Just give me a quick yes. Okay. Thank you. Sorry for that. You know what's crazy is I didn't plug in my microphone. So without you guys helping me, I don't know where I'd be. So let me not waste your time and let me jump right into the topic. So thank you very much for your patience. So basically, there's a study that shows that African Americans right now are the largest group of new investors in the country. I don't know if any of you saw this, but this is a really big deal. This is really epic. This is massive for us. This is something that I've been dreaming about. You know, when I first started talking about finance publicly back in 2006, 2007, I used to go onto urban radio stations and they would tell me, well, Black people don't want to learn about wealth. Why would you be talking about wealth? Because nobody was doing it. This was like, 14 years before the pandemic. And I would just try. I was like, well, we got rappers that rap about money. They talk about killing people for money. They sell drugs in their own community for money. Why wouldn't they want to learn how to get money legally? Why wouldn't they want to get money safely? Why wouldn't they want to take care of their families? So this is the kind of stuff I was dealing with. And but I just said, I'm just going to keep being consistent. So over time, I think I've done about 25,000 YouTube videos on this topic. I was doing YouTube stuff way back in 2011, 2010. And I was super, actually even before that, I think during the Obama administration, before Obama got elected, that's when we started the mission. And so to me, seeing the culture shift is really powerful. It's very exciting. So let me read some of this to you so you guys can see what's going on. By the way, do me a favor, hit the thumbs up button, thumbs up, share, subscribe if you haven't done it yet. Also, just so you know what we believe in B1 culture. B1 means Black first. Black first means we put our community at the top of our priority list. Black first means that our people matter more than as much as anybody else. We're not interested in just building wealth for other people. We've already done that. We're now trying to build wealth for ourselves. So give me a B1 in the chat if that makes sense for you, if you agree with that mission. So here it says, according to FINRA, it says investors of color are entering the market at a pace faster than white investors, and they tend to be much younger. This is just huge. This is absolutely epic. This is a very big deal. And basically what it's kind of saying is that we're now to doing exactly what I've always said. We're taking the lead. We're not trying to just close a gap. We're actually creating a better gap. A better gap is a gap where we're actually winning. The real racial wealth gap is going to be the one where everyone else is trying to catch up with us. And it says the FINRA Education or Investor Education Foundation. Sorry, that's what it stands for. Anyway, they've released a new report, Investors of Color in the United States. The report examines the behavior and attitudes of investors of color based on data from FINRA's Foundation's National Financial Capability Study, coupled with a series of focus groups conducted with young Black African Americans, Hispanic, Latino, and Asian Pacific Islanders. The report shows that investors of color are entering the market at a pace faster than white investors. New investors, particularly Black African American and Hispanic Latino. I'll let them have the props, even though every person from Latin America is not Black, or not a minority, or not a person of color. Just so you know that they have white people that speak Spanish too. Like you go down to Colombia, they got the white side of town in Medellin and the Black side of town. Let's just be clear about that. It says here the report shows that investors of color are entering the market faster than white investors. We already said that. Quote, with a large number of young investors entering the markets, financial education leaders will need to adapt, including providing relatable and trustworthy resources on channels these new investors use, said FINRA Foundation President Gary Walsh. While conducting this research, we learned from investors of color about barriers they or their families faced previously in building wealth through investing. Seeing an influx of new investors of color is encouraging and highlights the importance of our markets becoming more accessible. Key findings: investors of color are entering the market at a faster pace than white investors. Since 2015, the percentage of new investors has increased for all three groups: 9 percentage points for Black African Americans, 7 percentage points for for Asian Pacific Islander, and 6 percentage points for Hispanic and Latino. Investors of color tend to be younger. This is particularly noticeable among Black African American and Hispanic Latino investors, not voters. You're voting for yourself. You're voting for your money. Motivations for investing: non-white investors, particularly Black African American and Hispanic Latino investors, are more likely than white investors to be motivated by reasons beyond long-term profit, including short-term gains, a desire to learn more about investing, entertainment, and excitement because their peers are doing it. So basically what this reference is that there's sort of a cultural sort of thing that's connected to this, and I wanted to address that. There's actually research on this topic, and I want to kind of mention some of this research to you. So we have a lot of investors that are investing, but unfortunately, if you're not careful, you may think you're investing, but you're actually gambling. You think you're securing your future, but actually you're adding risk to your future if you're not careful. And one of the things that is out there in terms of studies is that when you're talking about young Black investors entering into the market, there is kind of an issue in terms of risk. Uh, a lot of times, Black households they're less likely to own stock, and they're more likely to rely on very high risk or informal investment channels. This is according to the Federal Reserve's survey of household economics and decision making. And so, basically, one of the things that they mention is that a lot of people are investing because it's hip and it's cool and it's exciting, and they want the quick flips. I'm not saying that the quick flips can't happen. They can happen, but the quick flips typically don't happen as often as the long-term wealth building process. So for example, in the $5 a day plan that we laid out, it's one of those things that's guaranteed pretty much based on history to build a substantial amount of generational wealth. Whereas I know a lot of people who use things like stock options for day trading, and their wealth isn't really going up. Their excitement levels going up. They feel like they're participating in the investment world, and that's a good thing. But there should also be a long-term component. There should be something that isn't going to just let you have fun while you're young. It's going to make sure you're good when you get old, if you get what I'm saying. So this is important for you to share with the young people in your family. I think it's really great that there's an interest in investing. But one of the things that they also mentioned in the research studies is that people are having a hard time finding reliable investment channels, reliable people to learn from, reliable people to explain how things work. And this happens, I think, because when people see that this has kind of become a trend and it's become part of the culture, you can go listen to the Breakfast Club or something, and they'll just have any guy on there saying, "Hey, we got to go flip this wealth and do this real estate flip." And next thing you know, you're kind of caught up in a tough spot, right? And so, really, I would say to you that investing is important, but you also want to be able to assess the risk of the investments that you're making. Every investment can be considered valid. Every investment has a level of legitimacy, but some investments are riskier than others. So if I go buy, $10,000 worth of Coca-Cola stock, that's not the same as me investing in somebody's real estate thing or something like that, because you saw what happened, for example, with the Tulsa real estate fund. And I made a mistake with that in the sense that I did say, hey, this is a Black owned business, support it. I lost money from it, but I wasn't really necessarily involved in the dealings of the fund, or because if I had been, the money would still be around. Like, believe me, that I would never have made some of the investments that I found out that were made there. But still, it's one of these things where whatever you put your money into, I encourage you to make sure that you know what you're doing with it. So with investing, the biggest thing to understand is that you can take losses just like you take wins. But also at the same time, you shouldn't be riding too much of a bronco, right? You have to have something that is consistent, that is long-term, that's going to build wealth in a way that is sustainable, as opposed to just sort of following along and just jumping into any and everything. A lot of people invest in penny stocks. Those are very bad. A lot of people invest in crazy cryptos, meme coins, things like that. That's typically very bad. A lot of the high volatility stocks, that can be very bad if you're not careful. Also, stock options. There's a lot of what they call 0-day options being traded, and that can also end very badly. So I'm not telling people not to do it. I don't give investing advice on this channel. I'll never tell you what you need to invest in per se. I'll talk about asset classes, but I'll never talk about specific assets. But at the same time, it's important to understand the risk assessment of every single thing you're involved with, because what I'm seeing is a lot of people really getting hit pretty hard, or people getting scammed, or just crazy things happening. I think there was something interesting that happened with a guy on the Breakfast Club, and it's turned into kind of like a federal sort of issue. So just be really careful with that. But for the most part, I think it's great though. I really want to also encourage you to supplement that by making that a community thing. Find friends that you can connect to. Find people in your family that you want to invest with. It should also be an educational process. It shouldn't just be a money grab. It should be something where you're getting together and you're making each other's lives better. That's the purpose of money. Money is here to make your life better. Money is not here for you to worship it. Money's not the be all end all. Money is not the ultimate thing that's going to just make everything, all your problems go away. Money is just something, it's a tool. It's a tool for a better life. Okay. So anyway, with that being said, please hit the thumbs up button, thumbs up, share, subscribe. My name is Dr. Boyce Watkins, and we actually have a free wealth guide you can pick up in the Black Business School if you want to learn secrets of wealth from the rich. My PhD is in finance. I got a doctorate in finance in 2002, and I taught at Syracuse University for 12 years. And before that, I taught at Ohio State University, the University of Kentucky, Indiana University. I also taught in China and some other places. So if you'd like to take a look at a free wealth guide I put together, it doesn't cost you anything. Just go to drboycefinance.com. You can pick it up there. Also, we do daily financial training for anybody that wants to listen. We call this economic elevation. So if you want to join us in the morning for economic elevation, you can just text that word morning. We call it money in the morning. That's kind of the nickname for it, or economic elevation training. So you can text the word morning to the number 87948. I will send you a text tomorrow morning and invite you to class. All I ask you to do is spread the word. I ask you to share the link with your family and your kids and stuff like that. All right. So let's see here. Let's see here. Hey, Doc, just a heads up. I tried to put in an order for KLC today through Charles Schwab. It wouldn't go through because of security concerns. There's some fraudulent issues going on. KLC. Okay, so KLC. I haven't heard anything about KLC stock in terms of fraudulent issues. I ran an order for KLC. Let me see here. Let me see. That's interesting. It looks like they are facing an investigation related to potential securities fraud. Now, KLC, that is a company, KinderCare. I like KinderCare, and I'm going to tell you why. I like it because there are experts who believe that KinderCare is sort of in an investigation that's kind of much ado about nothing. Now, again, I'm not here to say that you should buy it, but I am here to say that I bought some shares of this stock. I'm going to look at the stock right now and put it on the chart and just kind of see what's been going on with this company. Here we go. All right, so let me pull KinderCare up so we can kind of take a quick look at it. All right, so KLC, KinderCare. This is a company, I think Morgan Stanley actually recommended this stock. And so if you look right here, you can see that KinderCare has taken a beating this year. It's dropped by 47%, 48%. And basically what is believed by some is that this investigation could go away or be resolved. And what tends to happen is that if a company's under investigation, which doesn't necessarily mean that they did something illegal, but if they're under investigation, there are people asking questions and doing scrutiny. I got to look up the exact nature of the investigation. It looks like it's a securities fraud thing. But once investigations get cleared up, you tend to see a jump in value. So it's up to you as an individual to decide, do you want to be along for the ride or not? You had assets like XRP. Anybody own XRP? I owned XRP, and and during the time XRP was under investigation, I could not sell my asset. I was stuck holding it for the entire time. And then the minute the investigation cleared up, that sucker shot up like a rocket. I mean, XRP became a massive wealth builder in my portfolio. So I'm not here to tell you what to do. I'm just here to tell you that I did buy some shares in KinderCare stock. I don't know why Schwab would stop you from buying it. I haven't heard anything like that. E-Trade didn't stop me. But let me see if I can read a little bit more about the investigation. Let's see here. Law firms, a bunch of law firms are investigating whether KLC and its officers engaged in unlawful practices and issued false statements to investors. Yeah, that's a big deal. The investigation focuses on possible violations of federal securities laws, potentially related to the company's financial results and disclosures. So effectively what they're kind of saying is that the company gave information that wasn't accurate to investors. One of the biggest things that happens when this is one of the things that makes U.S. stock market so strong is that there are clear laws regarding what you're supposed to tell your investors and how you're supposed to tell them. And if you make a mistake and if you tell them the wrong information, or if you lie to them or something like that, or if you exaggerate certain things, then they will come and get you. They will come kick your butt. And that's one of the things that keeps the market safe. So basically, it looks like the investigation concerns whether KinderCare and certain of its officers have engaged securities fraud, blah, 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 blah. Okay, let's see here. I'm looking to see what else is there. I don't know. Let me see here. Give me 1 second here. I am looking that up because that is a stock that I just bought. So as an investor, I should know what's going on there. Hit the thumbs up button, thumbs up, share, subscribe. And we have a stock market investors group if you and your family are interested. It's Dr. Boyce stockmarket.com, and one membership you can share with your whole family. So you only have to pay the tuition one time. All right. Okay. So basically, it looks like there are some investigations into labor law violations in Massachusetts. Okay, so they're fined for some labor law violations. Child abuse allegations. That's pretty bad. Let's see here. Okay, operational safety concerns, securities fraud investigations. They had a significant drop in stock value after reporting an 89.3 million operational loss. Multiple law firms initiated investigations into potential securities fraud. One of the interesting things about that, though, is that a lot of times when a company loses money, somebody gets sued. So I'm not saying that they're innocent, though. It sounds like they have a lot of things they have to clean up. But if let's say that they hired some new CEO that came in and is able to fix things and turn it around, that can lead to a boost in the stock. Like for example, Starbucks had a big major stock price increase after they hired their new CEO and their stock had fallen. But what's funny is the stock shot up and then it went down again. But I bought it after it went down again because I believe the new CEO is going to make Starbucks strong. He's going to make Starbucks great again. All right. So let's see here. Yeah. So there's no resolution that's been announced yet. And so so if you look at the bull case for this stock, basically it's this idea that it's going to end up sort of either being exonerated or it's going to clear up the whole issue, meaning they might pay a settlement or something like that. Because here's the thing, childcare is a pretty sticky industry. It's a non-discretionary industry, meaning that millions of working parents have to pay for childcare. KinderCare is one of the largest daycare providers in the U.S. They have 1,500 centers nationwide in high traffic areas. So they've got a massive moat, what they call an economic moat. And also, if they survive these legal challenges, which I think that they will, the stock is going to like shoot up. Like the minute there's an announcement to say, okay, KinderCare issued a settlement or KinderCare has been exonerated, you're going to see that stock do some amazing things. Also, the federal and state governments tend to subsidize childcare quite a lot. And so they have a lot of good private public partnerships. And also they have a potential for a private equity buyout. So if they stay bearish, then what happens is that there are people out there are private equity funds that may look at that company and say, holy crap, we can buy an amazing business for a really cheap price. And that could end up taking KinderCare off the market and making it a private company, which means the shareholders would get a payout. So my conclusion overall, not investing advice, is I still like KinderCare. I like KinderCare. Now, one stock that I've been talking about a lot, that's or one asset or one stock actually that I've been talking about a lot that's done really well. How many of you own Oklo? I know I assume a lot of you bought Oklo. In our stock options class, we make a lot of income from Oklo. Oklo is a great income generator if you like to sell stock options or engage in some of the bearish strategies in order to generate income. I've seen a lot of people replace their income with stocks like this, and this stock literally went up 100% this last month. And I was really excited about it because I own a lot. I own thousands and thousands of dollars of Oklo. And also I know a lot of you do because I've talked about it so much, even though I always say this is not investing advice. I know that a lot of you, pay attention to what I say. So I try to say it carefully. I'm not always right though. That's the thing. I'm not always right because you can't predict an individual stock. I know people lie to you and they say, oh, I know exactly this is going to go up. I know precisely what this stock is going to do. Nobody knows that shit. Excuse my French. I'm cussing, but nobody knows that stuff. Nobody knows what a stock is going to do. And it frustrates me like crazy as a financial scholar. It drives me insane to hear people confidently say, oh, I know what it's going to do. Buy it. It's definitely going to go up. You don't know that. You do not know that. Well, why do I know that you don't know that? Well, because I've read 10,000 research papers that are based on something called the random walk hypothesis, which pretty much says that you can't predict the prices of individual stocks. And it's very strange to me. It's very sad. And this is one of the side effects of this investing revolution, which I'm very happy about. One of the side effects is you just have people out here just lying. You have people out here that've been buying stock for 3 months that are like, I can teach you all about the stock market. And I'm like, Okay, I get it. You've been studying stocks for maybe like 2 months, but I've been studying stocks for 30 years. I started studying finance when I was 18 years old. And this idea that people, so what's happening in my view is that you have a lot of people that are just getting bad information and they're being taught the wrong ideas. And then what happens is that when it doesn't work out, they say, oh, investing's bad. And it's not that investing's bad, it's that your teacher was bad. It's that the information you received was bad. Investing ain't bad. It's like marriage. When people say, oh, marriage is terrible, don't get married, don't get married. No, it just means you married the wrong person. You went through the process in the wrong way. So don't be blaming marriage for your bad decisions. Don't blame marriage because you got a crazy baby mama or your ex-husband, abuse you. Like don't say marriage is bad. You say that my choices were bad, my partner was bad, my situation was bad. Don't say marriage is bad because all the studies show actually that marriage is a massive wealth builder. Like all the studies show that all these people out here that claim to be financially insecure, that are struggling and going through hell economically, and you can't afford nothing because everything's expensive. All the studies pretty much show that when people have family and stable relationships, their economics are much, much better. They're actually in a much more comfortable financial situation. Not that every married couple is rich. That's not it. But actually, it makes sense, right? The dynamics make sense. If you have two people making money, then that's better than one person making money, right? And people get into these conversations, well, about 50-50 and what do you bring to the table and all that other stuff. And I'm just kind of like, well, I don't know if y'all should be 50-50, but I know that if you that it's easier to win a game if you got a teammate. I know it's easier to win a championship when you've got other players on the team. I know it's hard to win a championship all by yourself. So if you're last in the league and then you realize that you're going on a basketball court with one player and all your opponents are coming out with five and you can't understand why you're not winning, it's not because you're not a good basketball player. It's because you're not a good teammate. You haven't taken the time to value what others can bring to the table. Michael Jordan was the greatest basketball player of all time for the most part, right up there with Wilt Chamberlain. I think him and Wilt might battle. It's maybe it could even be seen as a tie. I have no idea. But even Michael and Wilt needed teammates to win championships. I think Wilt had Jerry West. Michael needed Scottie Pippen. Michael needed B.J. Armstrong and Steve Kerr, and he needed his teammates. So the question I ask you when you're trying to build wealth and you're trying to take advantage of this investing revolution that's taking place, which you should be, is I ask you a simple question: who are your teammates, and are you trying to get teammates, or are you believing the nonsense, the lie that you're supposed to be doing everything by yourself? Because if you believe that lie, let me just tell you, that's I curse it to the root. That is a lie that's straight from the depths of hell. That is a lie that will leave you broke, busted, and disgusted, stressed out, lonely, full of financial anxiety. That is a lie that will leave you financially insecure. Even this idea that you can have children and you're the breadwinner and the nurturer at the same time. Do you know how much work that is? That's insanity. So I'm the person who thinks about this from an investing standpoint. And so to me, that says that it's absolutely essential that you think very carefully about who you let into your bedroom or whose bedroom you go into, because that will lead to massive economic consequences, because children are a massive economic expense, or they can be a massive economic investment. In the right environment, children are a great investment. You invest in them, they invest in you. You take care of them when they're young, they take care of you when you get old. You raise them properly, they become a great asset to the family. You build a family business. I wrote about that in my book, The 10 Commandments of Black Economic Power. If done poorly, then the children become a liability. When you bailing little Pookie out of jail, when you're out here trying to, when you're out here trying to take care of 25, 30-year-old kids. And my book is called The 10 Commandments of Black Economic Power, by the way. If you go to drboycebooks.com, you can get a copy. And that book is essentially focused on economic culture. And it really says, what does a strong economic culture look like in a family? How do you begin the process of putting together the kind of economic culture that's going to allow you to win? Like, what do you have to do in terms of your thought process to make absolutely sure that you and yours are winning as opposed to ending up last in the league every season. And so that's what the book is built on. I thought about it. I conceived it back when I was on the faculty at Syracuse. I finally got around to writing it years later. It's the number one bestseller on Amazon in the public finance category. So thank you to those who like it. If you want to get a copy, you can go to drboycebooks.com and feel free to get as many copies as you want and give them away and use it as a teaching tool. All right, so let's get back to it. All right, so in terms of what's going on with these studies, another thing so FINRA basically found that African Americans are the leading group of new investors in America. They said that according to the study that this group is more likely to engage in risky investments such as meme stocks, that's not an investment, cryptocurrencies, that's only an investment if you're buying solid cryptos, and options, that's gambling unless you use it in a way that is healthy. So effectively what's going on is that the new investors are making moves, which is great. But one of the big risk factors is, in a way, it reminds me of when a lot of black people started going to college. When a lot of black people started going to college, they were like, oh, that's a great thing. It's great for all of us to go get an education. But what they found was that the increase in the numbers of black people going to college was leading to a massive jump in the amount of student loans. And it's because what you'd have are people that either went to school for a little while and dropped out, but they still walk away with $50,000 in debt, which hurts black wealth. So going to school did not help black wealth. It actually ends up hurting it. Or number two, they get their degree from what they call the degree mills. Did any of y'all see that there was a big scandal with nurses? Did anybody hear about that? About there's a big nursing scandal where there were these schools that were giving fake nursing degrees. Anybody remember that? I don't remember what state it was. I want to say it might have been North Carolina or something like that. But literally, there were all these nurses that were under investigation because there was a school where they were basically like, "Give me money and you can be a nurse," which is the scariest thing ever because nurses can kill people because they have access to deadly drugs. And so this is one of the things that can happen is that when you're new to an industry, there are people that will be sort of waiting to prey upon your ambition. Here's the deal. Here's what we can say. Now, I spend a lot of time critiquing our community. I spend a lot of time talking about the things I don't like, but I'm going to spend a second talking about the things I love. Here's some things I love about Black people, especially B1 people. You guys are super ambitious. The studies are showing, pretty much all the data showing that Black people, particularly Black families, they want economic elevation. Black families, they want to elevate their finances. Black families, they want to break generational curses. They want to be financially secure. Give me a yes if you see yourself in that category. How many of you would agree with this? Like, this is awesome. Like, and and really, even when you compare it to other groups, compared to white people, Asian people, Jewish people, it doesn't matter. We're winning in that area. And this is beautiful because this defeats the narrative that we all want to be rappers and baby daddies and thugs and idiots and that we twerking all day, all this other stuff. That's the media's depiction of us, but many of us are openly rejecting that depiction. And I just love it. I'm here for all of it. Like, I love seeing us stand up for us and stand up for our image and saying, stop desecrating our image. Stop desecrating the image of the Black woman. Stop acting like the Black man wants to go to prison and wants to do stupid things. That y'all did this because you wanted us to fill up your private prison. So you got our little boys thinking that it's good to be a drug addict and a criminal and to go to prison and have somebody bending you over, in the shower every day. Right. So that's not what we want. That's not what we want for our kids. So I think that you should continue to reject that because that's actually working and it's great. But on top of that, you're just seeing this sort of ambition, this aspiration, this resilience. And this to me is what we gained from our ancestors after slavery. Like, if you go back and you study things like Simmons College of Kentucky, you'll find that there were former slaves that literally were building a whole university after college, right? Like, they literally, after slavery, they literally built an entire university. And they were educating our people at the highest levels, and they didn't wait for affirmative action. They weren't waiting for DEI, none of that, because there wasn't no affirmative action. There wasn't no DEI. And they were super proud, and they were getting it done, and they were getting it done at a high level, because there's something special that happens when you kind of know that ain't nobody gonna save you, right? There's something that happens when you don't get deceived into somebody else pulling you into their welfare state, putting you at the little kids table, putting you in the handicap category, and just sort of sitting back waiting for somebody to give you a meal. A lot of us ain't waiting for nobody, and I think that that's awesome. Like I encourage that. Like I think that needs to be a fundamental part of Black culture. I think uh rugged independence has to be something that we embrace because that's what works. Like the people that I know that are Black that are doing well, that have good families, a good life, good health, good wealth, doing good. A lot of those people are the types who just ain't really worried about what somebody else is doing. They're not waiting on nobody. They're not getting all caught up in what white folks think about them. They're not getting all riled up because somebody called them the N word. They're just building, 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 right? And that's an old picture of Simmons College. I mean, look at those. Those people are proud. Look at, you got the administrators in the front. I think this was their women's college or something, because these are all women in the picture, but they have men. So we're advanced in that area too, right? Like there's all these false depictions of Black men being sexist and hating our women and oppressing women and all that. No, I think we've always elevated our women. I think we've always loved our women. I think that's what real men do. And that's why I would encourage any man who gets caught up in the manosphere where you start speaking to anti-woman and you're talking about Black women, just be real clear about who you're talking about. I think it's okay to say, I don't like all the twerking, I don't like all the nonsense, but it's not okay to use all Black women in a conversation where you're really talking about a specific subset of misguided individuals. Right? You're not talking about, everybody. You're talking about the ones that maybe need a little talking to. And I think that that's okay, because I think that's what men are supposed to do. I really believe that. And women as well. I think all of us do that. I think Felicia Rashad, if you remember Felicia Rashad, I know I'm getting off the topic just a little bit, but I hope that that's okay, because we are talking about investing. I'm talking about investing in your community. I'm talking about investing in your image. I'm talking about investing in your families. And the biggest, most important investments you ever make are going to be the investments that have nothing to do with money. So I just want to encourage you, like, keep making those investments, keep on going. And I got another image of Simmons College because I'm super proud of what they're doing. Dr. Kevin Cosby is the pastor of St. Stephen's Church in Louisville, Kentucky. And they literally, as a church, went out and bought a whole damn university and like are educating our kids. And they created this amazing HBCU. And it's one of these things where even in their own city, they have trouble getting the support from the Black community because there's so many Black people who are caught up in the University of Louisville. And the University of Louisville, unfortunately, is not so much an ally to this institution. They're really an adversary because they're part of the reason that the institution died in the first place. And they went back and resurrected it. And I can tell you, Black excellence and Black pride defeats racism any day of the week. Being great at what you do will help you overcome any and every obstacle that's put in front of you. Having somebody talk negative about you won't matter to you if you're talking positive about yourself. If you're filling your children's brains with positive information, positive energy, then it won't matter if somebody says, oh, well, he ain't nothing but a Black boy. I don't like them Negroes. Who cares, man? Go build something great. That's what you do. So shout out to Simmons College. I just have to give them props. Because I'm in my hometown in Louisville, and I just feel like it's important for me to make sure that my people get the respect they deserve. All right, so anyway, please hit the thumbs up button. Thumbs up, share, subscribe. My name is Dr. Boyce Watkins, and I want to remind everybody that we do economic elevation circles once a month, and this is where we get together. We make the 100-year plan for our families, and we're going to meet tomorrow night. Let's see, today's Saturday, so it's Monday night, boys. So not Sunday night. So Monday night, we're going to meet for the Economic Elevation Circle, which came out of the Economic Elevation Summit, which we had in Miami. It was beautiful, luxury hotel. We sat there for two days, and we just planned and prepared and strategized. This is more valuable than what you get in college. I know that it's more valuable because I know that no university that I'm aware of teaches Black wealth at a really microscopic level. My wife is a professor of social work and a licensed therapist. So we created the first ever Black financial therapy department because we wanted to figure out what are the psychological barriers to building Black wealth. Like, what is it that's causing us to not have the mindset that we need in order to build wealth? So this led to an exploration, deep dive research that she's been doing in terms of trauma. And she's actually doing original academic research that's going to be published in the journal on Black wealth and how how it's impacted by childhood trauma. So shout out to my wife. I've invested my life and my energy into a smart Black woman who's from the streets of Gary, Indiana, who cares about her community, and she's doing great research. So these are some of the things we're doing. So if you want to join us on Monday, just go to economicelevationcircle.com. And of course, if you want to join for the free class every morning, just text the word morning to the number 87948. And I'll also send you an invitation to what Andre Hatchett's doing in the Black Business School. He's actually doing things related to becoming a mobile notary, making money as a mobile notary. Apparently, that's a great way to make extra money. So a lot of you are looking to put money in your pocket. And that's our goal, to solve problems, to put wealth in your account and money in your pocket. If you got cash flow and you've got a stock of wealth, then you're pretty much financially secure. You're on your way to financial security. And that's what the goal is right here. All right. So let me give you guys, I'm going to give you guys a stock. So we were talking earlier about sort of this crazy, really interesting news about Black investors sort of taking the lead, which I think is amazing. This is what we're supposed to be doing. And I'm going to give you a stock that I like right now. I'm not telling you what stock I'm not telling you what stock to buy, but I am going to give you a stock that I'm investing in right now that is one that I think has a chance to do well. A lot of you, how many of you have heard about the water shortage? Has anybody heard about there being about there sort of being a shortage of water? How many of you have heard about that? Well, apparently, Dr. Claude Anderson, who's the author of Powernomics, his website is powernomics.com. He talks about this. He has a lot of really interesting thoughts about water sort of being an issue in the future. And I think it relates a lot to like these data centers as well. I mean, among many other things, these AI data centers, apparently they take insane amounts of water to keep them cool. Now the Chinese are slick with it. You know what they did? They're actually building data centers under the ocean or something, which is just truly amazing and innovative and shows how smart they are. So they're kind of like they're like the canaries in the mine in general. Like Americans, we're all slow and stuff like that. But basically, according to Dr. Anderson, there are a few variables that pretty much say that there's a pending water shortage. So as of 2024. There's 2.2 billion people in the world that lack access to safe drinking water, and 3.5 billion are without safely managed sanitation services. I mean, that's insane. That's a ridiculously large percentage of the world's population. Half the world faces water scarcity. Around 50% of the global population experiences severe water scarcity for at least part of the year. Agriculture accounts for 70% of the global freshwater withdrawals. So there's a projected 40% water demand supply gap by 2030. So by 2030, global demand for fresh water is expected to exceed supply by 40%, intensifying the risk of water scarcity. And so if you're looking into like why this is happening, it sounds like it's a multitude of factors. It's not just the AI data centers. But basically, there is an overuse of water resources from agriculture. Climate change is causing more droughts, faster water evaporation, unpredictable rainfall, melting glaciers. So that's shrinking snowpacks. Urbanization and population growth. That's a big deal. Population and poor management from factories and farms, etc. So all these factors are coming into play. And let me give you some investments you can make if you want to be able to have a long-term win that comes from this pending water shortage, right? Supply, demand, prices go up, stock prices end up being impacted by that. So there is something called the First Trust Water ETF. Ticker symbol is FIW, Frank India Waterfall. FIW. Somebody type that in the chat, please. FIW, it invests in 36 water-related companies from infrastructure to technology, and they offer a balanced portfolio. So the balance in the portfolio matters because you're not trying to bet on any particular company. You're just basically betting on an industry. Betting on an industry is better than trying to bet on a company because companies will disappoint you. Industries are much more predictable. I was mentioning to you earlier that it's really, really, according to the academic research, and I read thousands of papers on this when I was on the faculty of Syracuse, basically it's really hard, if not impossible, to predict with certainty the direction of a stock. But it's very easy to predict the direction of an industry. Like you can look and you say, we're gonna need more of those things in the future, right? So for example, when I was talking about Oklo, Oklo was among a basket of stocks. You see Oklo went up a ton. Sorry, that's Bitcoin. That's the wrong chart. Sorry, guys. But anyway, Oklo shot up like crazy because, and we should talk about Bitcoin too. But Oklo shot up like crazy mainly because because it was part of sort of this group of assets, including like SMR and others that are connected to these small modular reactors that are supposed to be critically important to get enough energy to for all these data centers. So you see this month it went up by 100%. I think it could go much higher. I think Oklo's at 40. It's at 48.87. But once they become super operational and profitable, I think the sky could be the limit for this stock. However, I believe in sort of preparing or hoping for the best and preparing for the worst. So I would sort of just not expect everything to happen overnight. But if you are a believer in this industry, then companies like the Oklos, et cetera, are the kinds of assets where you can look back 5-10 years from now and say, I'm rich now because of these decisions I made in 2025. Like, and this is something I really want you to kind of consider when you think about how you're going to invest and what kind of investor you want to be. Consistent effort over time is really what makes people wealthy. So you look at Bitcoin, look at Bitcoin right now, right? 107,691. Now, if you were to go back and listen to things I was talking about in 2018, you would hear me say, I think Bitcoin is going to go to 100,000, right? I said that. I said it in 2017, I think. And at that time, it was far lower than 100,000. And I thought Bitcoin was going to hit 100,000 much sooner. I really did. And it probably would have if we didn't have regulators trying to kill it. I mean, they just hated Bitcoin and they were fighting it like crazy. And they didn't realize the power of the people that believe in Bitcoin. Like they're just these hodlers that they won't let go for dear life. They're going to go down with the ship. So I think they're the ones who kept Bitcoin alive. So now Bitcoin is at 107,000. Now here's the deal. Look, if you had just if in your mind you accepted that thesis, if in 2017 you'd simply said, I believe that over time Bitcoin's going to go to 100,000 and beyond. So let's say that you said to yourself, I'm going to invest $100 a week in Bitcoin and I'm not going to stop. When it goes down, I'm not going to stop. When it goes up, I'm not going to stop. No matter what it does, I'm not going to stop. That strategy, if applied just in 2020 or 2018, 7 years ago, not that long ago, 6-7 years ago, you would be rich. You'd have at least 6 figures in your account, which makes you better than 95% of all Americans. Some of you would have 7 figures in your account. Some of you do have 7 figures in your account because I talked to you. Some of you have been, we've been talking about investing for years. And so I've seen some of you. I've seen a lot of you talk about the $5 a day plan. And there was one guy I met at one of our conferences, and he said that he just bought he bought a $700,000 house for cash, and he just bought another one that was like $1 million or something. And he literally said, I started with the $5 a day plan. I thought that was awesome. Like I was like, whoa, holy crap, what did you do? That's amazing. But the reality is that this is how wealth gets built. So here's the deal. Look, I want you to understand this. If I talk to you about 2032, I don't want you to look at 2032 as if it's like way off in the future. 2032 is not a year where we're going to have nothing but flying cars and robots are going to be doing every single job, or we're going to be living on Mars. Now, there are going to be some changes. I do think robots are coming. I do think that flying cars are kind of a thing. Driverless cars are probably more likely in the near future, for sure. But but there's still going to be, a lot of the same issues. The world is not going to change as much as you think. And my point is to say that when you're talking about the future, we tend to look at the future as being far away. But if I say to you, look, 2032 is to 2025, what 2025 was to 2018. Well, 2018 wasn't that long ago. 2018 was not that long ago. Give me a yes if you can feel like you can remember 2018 like it was yesterday. How many of you feel like, I don't know about y'all, but I feel like I'm like, oh my God, 7 years. Holy crap. 2018 was, I got pictures in my phone from 2018. It's great. Now with the kids grow up a lot during that time, but we don't change that much. And I'm like, man, I was doing the same thing every day in 2018 that I'm doing right now. So God help me, if I'm healthy and everything, I'll be probably doing something similar. I'll be sitting here talking to you in 2032, just like I'm talking to you now, except in 2032, I'm going to be talking about 2025. And in 2032, one thing you don't want to have is you don't want to have regret. You don't want to be sitting there saying, damn, if I had started doing this in 2025, I'd have $300,000 in wealth right now. If I'd simply made $100 a week investments in crypto or whatever, I'd have so much more money than I have right now. Stop waiting. Stop sort of sitting there and or or thinking that the fast money is what you're aiming for. You're not aiming for fast money. Fast money is the don't last money. You want the long money. The long money, the consistent money, the sturdy money comes from consistent, sturdy, repetitive behavior, right? So what is your repetitive behavior that you're going to commit to right now that's going to make sure that you are living large in 2032? What is it? What regular thing are you going to do? I'm not going to tell you what that is. I can give you suggestions, but I'm not here to tell you what to do. I'm not a black leader. I'm simply a finance professor. I'm a financial scientist, and maybe I influence people in certain ways, but I believe leadership comes through action. It doesn't come through talking. I'm not asking you to make me a leader. I'm simply leading and doing my best and doing my thing and doing it with intentionality, so that if you do think that there's value there, and then I appreciate that. But for the most part, I'm not asking to be your leader. I'm simply moving. Right? I'm moving, making a plan, laying it out there. So what consistent, repetitive thing are you going to do right now, every week, that's going to make sure that by 2032, you're going to be absolutely killing it? Well, the $5 a day plan, someone's asking what that is. If you go to blackwealthmasterplan.com, that's where the $5 a day plan is. I'll put the URL on the screen. Blackwealthmasterplan.com is free. Blackwealthmasterplan.com. Let me put that in there. And also the other thing too is if you text morning to 87948 and you join our free Money in the Morning class, you'll get a link at some point introducing you to the Black Wealth Master Plan as well. But the Black Wealth Master Plan is the thing that I know, based on economic theory, that will make everyone in this room wealthy. Because it's based on history of the market. The market is easy to predict if you're not trying to do nothing crazy. The market is clearly a money machine as long as you are willing to be patient and you don't do crazy stuff. Warren Buffett made just a ton of money, not by being fancy and overly complex and super hyper sophisticated in his strategy. Warren Buffett, most of his investing strategy is built off this book by Graham and Dodd called Value Investing. This book was written in 1932. This book is almost 100 years old, and that was the foundation of his investing strategy. Warren Buffett had a strategy so simple that I could explain it to your 7-year-old son. Like, that's how simple Warren Buffett. Wasn't nothing fancy going on. Stop believing that the stock market is some magical place where only like people that went to Harvard are able to make money. That's just not true. That's not how it works. And I say this not as a finance professional. This is my science. This is what I studied, right? So do that. Just be that. Do that. Make the move. All right. So anyway, I'll give you the stock again that I mentioned earlier. It was the water company. It's the ticker symbol was FIW, and that's the First Trust Water. And so if you believe in, or if you are into that thesis that water shortages are inevitable, then I would say that might be one of the companies that you can consistently invest in that will build your wealth over time. All right. So anyway, that's pretty much it, guys. I'm going to go. I'm going to be back tomorrow for class. We do class every morning at 10 a.m. Eastern. So if you want to join us for Money in the Morning class, just pull out your phone, text the word morning to the number 87948. Text morning to 87948. Please hit the thumbs up button. Also, we have financial workbooks for kids. So summertime's coming. A lot of you are trying to figure out what to do with your kids. I personally think that this is a great time for you to make them into the economic masterminds that they need to be. We don't play when it comes to our kids, because our kids are the future. And when it comes to Black children, they are the original asset for the community. They are our $1 trillion power play. And the more we invest in them, the more successful they're going to be. We should invest in the children as much or more than we invest in the companies we work for. We will invest 40 hours a week, 2,000 hours a year, 20,000 hours a decade, 100,000 hours over a working career into a business that you cannot pass to your kids, into a job that will not be inherited by anybody in your family. You're investing into a company where they're building generational wealth for somebody else. I'm asking you to reconsider that proposition. I'm not asking you to stop going to work. I'm asking you to stop it with the nonsense and invest as much in your kids as you are investing in that damn job. So when I talk about investing in Black kids, I'm not going with the deficit model. We're not talking about how deficient they are and how they're struggling so much. No, they are winners. They are lions. They are capable. They have energy. They have talent. So invest in those dang kids, because so we teach stock options to children. We have stock options flashcards for kids. If you go to financialworkbooks.com, you'll see our workbooks. You'll see flashcards. So summertime's coming. And so as you send the kids to basketball camp, football camp, we got one that's going to be at dance camps and stuff like that. Well, also, we're making sure that she understands her economic training as well. So get the kids the training they need so that they can win. You are the educational institution you've been waiting for. You have all the tools that you need, and I'm here to just have your back and support you in any way that we can. So thank you for being a part of the Black Business School. We have about 250,000 students worldwide. We are the best HBCU in the world when it comes to Black wealth, because we focus on Black wealth. Our costs, we keep our costs low so that we don't have to take money from any and everybody. We don't go for money from the government. We don't take money from corporations. We build the resources we need, and we are getting it done at a very high level. So this is what we do. This is what we're all about. So God bless you. Have a great day, everybody. Thank you so much for listening. I'll see you all tomorrow morning at 10 a.m. Eastern in class. Have a great day, everybody. Thank you for listening. Peace.